Welcome to Alpha Wolf's Den. It's here that we seek enlightenment. Alpha Wolf Trading recognizes that the most successful companies in the world at one point had no earnings. There's a lot more to a company than just its earnings report. That's why here at Alpha Wolf's Den, we interview executive teams. We want to get to know management. We want to understand the vision, the mission, the strategic drivers, the plan. We want to separate fact from fluff. This is not a paid for promotion interview. This is solely wanting to know the company's vision, mission, their critical success factors, their strengths, their weaknesses, their opportunities, and the threats. We want to know the long-term objective and the tactical initiatives that leadership plans to implement to achieve success. We want to know about the company's debt, the cap structure, what it's going to take for them to become self-sustaining and stop burning through cash. We want to know management's previous failures, challenges, hurdles, how they overcame them, or what they learned that they can apply in their current role. We're trying to identify the risk and the reward. And oftentimes, it's strong leadership that makes the difference between success and failure. Here at Alpha Wolf Trading, we are looking for the hidden gems. And I hope you enjoy this interview because this is one of those companies that I think could be a hidden gem. Please understand that this is for educational and entertainment purposes only. This is not financial advice, and I am not a financial advisor. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up interview with the founder of Auudia, who actually has had a couple of interesting news announcements recently, and I wanted to make sure that I got Jeff Thramann in here to, basically go over what I think are pretty significant announcements and talk about the internal metrics that Jeff had in mind for what he would consider to be a successful start to the Auudia Fader program, right? Jeff, thanks for coming in and taking the time to bring us up to date, but pretty exciting stuff going on.
Yeah, thanks, Tim. Thanks for having us. It was a really big announcement for us that we put out on Monday, and it was really the culmination of what we said we were going to do when we launched Fader on February 15th. We had provided guidance that we were looking to drive about 50,000 installs and 5,000 or 10,000 MAUs at a cost per install of $5 over the, by the end of the second quarter, and that we would release how we're doing on that, the interim results 90 days after launch, which was really, Sunday. So we put it out on Monday. And as you saw, those numbers, far exceeded what we thought we were going to do. We're driving at a cost per install of $331, which is lower than the $5 we were hoping to attain at the end of Q2, and we think we'll continue to improve on that. And we put out that we're close to 30,000 MAUs, which we have now passed. So really, really happy about that. So everything tracking, above above schedule on that. So very, very excited to put that news out.
So unfortunately, you did have this news and it beat all your internal metrics, and what you publicly kind of announced is what would be considered a successful start. You blew those numbers out, right?
Correct.
And unfortunately, you just happen to have the announcement on Monday after like the worst Friday the market has seen in like quite some time, right? We had a lot of pressure on the overall market, right?
Yes.
So the street didn't necessarily appreciate or show the appreciation. And we're going to, a little bit later, we're going to talk about the technical aspects of that, how this thing played out. The stock has been getting hit. Then again, about 90% of the stocks in the overall market have been getting hit. So I don't necessarily feel as though this is reflective of anything that you announced on Monday, right? It just happened to coincide with a very weak market. But this is all, in my mind, really, really good news.
There's no doubt. I mean, for me, I'm a big investor in this company. You know that I bought $4 million of the IPO, haven't sold a share, and don't intend to sell a share. But we've been operating off the idea that people want to listen to AM/FM radio by having complete control of the listening experience, including eliminating commercials. But we don't have any proof of that, right? We have surveys, we have some pilot data that indicates that might be of interest, but our big, threshold to driving value was really launching on February 15th and then seeing what happens. And if you launch a consumer-facing app and you get crickets, that's fatal. I mean, it's game over, right? So that was a big, high-risk maneuver for us to put out numbers out there to say, hey, at the end of Q2, we think this is what we're going to hit to be a successful launch. I mean, we were drawing a line in the sand, planting our flag down and saying, this is it. This is the bogey. This is what we need to hit. This is what's going to be a success. And then we blew it out of the water. So for me, as an investor, not seeing the crickets and seeing a more favorable response than we expected, I thought this was the single most important metric we've put out since we started the company 10 years ago. So I'm very excited about it. I'm very bullish on where we go from here. We're going to report updates on these numbers because we're going to continue doing what we're doing. We're going to show what we achieved at the end of Q2. And then the next step in this is starting to work because now we have an audience, right? We have a bigger audience than we thought. So so ahead of schedule, actually, we're going to start the process. And it's a process of converting folks from the free tier that they're currently on into the subscription tiers. And we're going to work through that process, and we can now test with segments of that audience to see where this goes. And we can also do some major product improvements from 215 until now. And we've put some of those out as press releases, for instance, a Discover program, but there's others. There's one huge one that really changes the whole game because we're not delivering on the full promise of what Fader should be yet, because we're still cutting out the talk segments, the local content of the stations right now. We're erroring on eliminating commercials. So we're cutting out a lot of that talk stuff. And that's going to be fixed when we insert our News Talk Sports algorithm into the app, which we believe we'll have completed by the end of Q2. So that'll be another major upgrade, which should take these numbers and even improve it more. And then as we continue to build out the content capabilities, that should improve it. We just had a release, just a couple of days ago on a thing called Fader DJ, where there's a DJ that we're hiring, that we're engaging with. It's kind of walking people through what's going on with the app. Like when you're listening to content that Fader's putting in front of you and when you're listening to your local station that you're listening to. So it helps with some of those transitions to help people understand exactly what they're listening to. So that's a really cool addition. And we'll see how consumers respond to that. We're expecting another uptick on use there.
So, what's really interesting is for anybody that's watching this right now and is new to the story, Jeff came up with this really bodacious idea of making AM/FM radio more consumer friendly, right? More consumer friendly, more engaging, just better across the board, as a lot of the Spotify's and Pandora's and these paid versions of or music broadcasting, right? You wanted to give radio the same opportunity to provide that type of service, still maintain being a radio station, but be able to provide that type of service for those that were willing to pay up for it, and keep and here's the big differentiator, keep your local news, weather, sports, all your DJs that you like to listen to in the morning, whatever, keep that all there as well, but not have to listen to ads, not have to listen to any commercials, right?
Exactly. You can sum it up in one word: control. We give the consumer control over the AM/FM radio listening experience. And control means they can listen to whatever they want. So the station plays. If they don't like a song that the station puts in front of them, they can switch to another piece of content and get returned right back to that station at the beginning of that station's piece of content. They don't want to hear the ad break. That's automatic. We have an AI platform that does that. You don't have to skip. You don't have to do anything. So it's really about giving consumers control over the experience. Nobody has the AM/FM radio listening experience. Nobody has local audio content. And I say this all the time, from a time spent listening perspective, radio is the 800-pound gorilla. They just don't have a mechanism to deliver it to consumers in the way consumers expect. Pay a subscription and get complete control over the experience. And that's what we're delivering. And now we're taking that control and we're moving even further into a bunch of different content choices. You want to try to find new artists in your local market? We're going to have a Discover program that does that. We're going to be bringing in, we have versions of audio versions of your Twitter feed. We have newscasts. We have shortcasts. We have things from out of town that you can bring in. Stock quotes that you're interested in getting updates on. You can bring.
I might be interested in that.
Yeah, I'm just telling you, you have complete control. You want to hear the ski report up at Vail? Bring it in. The surf report in Malibu? Bring it in. So it's complete control over the audio content listening experience is what we're really bringing to the table.
Right, and you're expanding that content. It's just going to get more exciting, more intuitive, and more personalized, right, to your likes, and all while still listening to your local radio station that you happen to like. Or being from Cleveland, maybe I'm listening to Las Vegas, and maybe I'm listening to a station I used to listen to back in Cleveland too, right? I mean, all kinds of cool features on the Fader app. And I want to highlight real quickly, and I really want this to sink in, the magnitude of this, which is that Discover program that you announced. I would say that the radio, or not radio, but the music business industry is a very difficult business to become successful in as an artist, right? I think that's very challenging. You've got to how do you get mass exposure, right?
Yeah, it's hard.
It's tough. I mean, that's why they have, America's Got Talent and what was the X Factor and all that stuff, right? That highlights these people that come on, and you see how many talented, unbelievable voices there are out there. There's a lot of them, right?
Right.
To really get that hit or whatever it is, get that contract, it's tough. But what you're talking about with this Discover app is providing an opportunity for local artists to get their music on radio stations nationwide.
Absolutely. And it's the streaming radio station on Fader, to be exact, right? Because it's going to be Fader content that gets put in there. And this isn't something that we're inventing. This is a continuation of a huge trend. There's a lot of talent. Not all of it can get signed up by the labels. So the rest of that talent is stuck. They're on their own. And you first started seeing platforms like SoundCloud create a platform for people to go on and try to create their own audiences. But it's limited. They can't break into the big leagues with that. Now you're starting to see the whole indie distribution business within the music industry. It's the fastest growing segment of the music industry. There were a couple of big fundings last year, a couple of $1 billion plus IPOs in this space. And that's about partnering up with the artists that are starting to get some traction on these various platforms, but they're not going to sign with the labels either because they don't want to, because they want to own all their material, or because they can't and they think they want to try to develop this on their own. So these indie distribution platforms are helping to market these groups, get them out there, let them keep their content, unlike the labels. And then, but still, nobody has an avenue onto radio, not even the labels, right? The labels can get them spun, but that's it. And they have way more artists and songs than they want to get spun on air. There's not enough inventory. So what we do is we have the ability to get all of these artists, partner up with those groups, get all of these artists in front of radio station audiences on the Fader platform, and then see how they're doing with those audiences. And the program directors at the stations who make the decision as who actually gets spun on air, they get to see that data. And they can say, hey, these are the artists I should start to break. And then they can pull them onto radio, because that's really their badge of honor, right? Who did I discover in my local community that my audience wants to engage with? And we provide a mechanism there. It's a win for the radio station program directors. It's a win for the artists to get discovered onto radio. And it also helps the artists identify where's their audience, like who's going to pay for tickets for them to come on concert, and what radio station should they be advertising on when they want to, come into a specific area and sell some tickets. So it's a whole game changer for the space. And again, we didn't invent this space. It's been growing. It's the fastest growing segment of the music industry. We just happen to provide a really high value add to that for the artists and for the radio stations,
right?
And the labels.
It's in my mind, it's a win-win-win for everybody.
Exactly.
Right?
It's a perfect product.
I love win-win-win things, right? I mean, I just love those things for some reason. I like it when everybody has the opportunity to come out on top. It doesn't have to be, a loser and a winner. It could be a win-win-win. The problem that I would say is that, you when you first came out with this product, you tried to go to the 800-pound gorilla and say, look, we're going to, give up the majority of the subscriber fee to you guys. All you got to do is basically talk about our product, right? And use a portion of that money for your local market. I think those were the conditions. Is that accurate?
Yeah, that's generally it. We asked them to promote the moving their listeners to the Fader app, and then using some of the revenue they get from that because the revenue they get is related to time spent listening to their stations on our platform. So they're incented to then take that money, reinvest it into their product, their talent on air, and perhaps some exclusive shows that are only available through Fader to really drive additional listening. And listen, it's not like radio pushed back and said, hey, we're not doing this. They've been cheering me on throughout the entire process for 5 years now, as I first went to them to do this. The problem is they have their own issues, right? And they're struggling with their own challenges, and they're trying to, survive in this era and kind of reinvent themselves on their own terms as well. But they've basically said, come back to us, show us that we can make more money on one of your subscribers than we can on our advertising model. And this is a direct quote from one of the big ones. We'll be the fastest followers you've ever seen. So that's what we're doing. We're showing that, right? Step one is, do people care? And I think we just answered that with our data on Monday. Step two is going to be, what's our subscription conversion rate and how much revenue can we generate on this? When we spend $1 million on marketing, what kind of recurrent revenue does that turn into? And how does that scale up so that we can make that promise to radio that you're going to make more money here than you are with your ad model? And we think we're well on our way to doing that, but that's the next data that's coming from us. And that's going to be something that takes us to the next level. So what we've done so far, and that's what's so big about this week, is we've kind of answered the bell that consumers care about this. they're willing to download the app and they're willing to use it.
Okay. So I think it's extremely important to make clear that, this market right now, we haven't had a bear market in, I don't know, I want to say 12, 13 years, right? This is a bear market. If anybody is curious, I know they haven't officially declared that on CNBC yet, but trust me, it's a bear market. How long bear market lasts, I can't tell you that. And, I can't tell you when a company or when the pain is going to be over. I think there are a lot of uncertainties out in the marketplace right now that one thing is for sure, Wall Street does not like uncertainty. They hate it, right? I mean, when you have an uncertain market, we've got a war. COVID isn't gone 100%. I don't think. I think that's still going to be an issue. We'll see what happens coming up in the fall. There is just a lot of uncertainty out there. But I can tell you this: there are also a lot of companies that are getting ridiculously stupid cheap. And I would consider Auudia to be one of those companies, right? This is is it a risk? Absolutely. It's a risk, right? Because this is a whole new frontier. But if you really take a look at all the components of what makes this so unique, and the things that you just talked about, the personalization of what I want, stock quotes, that's going to stick in my head. If you don't come out with that, I'm going to get really pissed. That stuff is huge to me, right? I mean, I would love that to be able to pull up something that is meaningful to me. And I think it's going to get more personalized. It's going to make that whole experience better. And it is still the 800-pound gorilla. I don't see that changing anytime soon. Pandora's been around forever. Apple iTunes around forever. Spotify around forever. I mean, they've all been around. What's the other one? There's a bunch of them, right? The 800-pound gorilla is still the 800-pound gorilla, right?
That's why I say, listen, the audio space hasn't innovated really in 10 years. I mean, this is the biggest innovation to come around in 10 years in the audio space. And it counts on two pieces of technology that you couldn't do 10 years ago. The phones had to get more powerful because we distribute everything to the phone, and the AI engines models had to get small enough that you could run them on your phone. You couldn't do that 5 years ago. You can now, and we're one of the first groups doing this. We distribute all our processing out to the phone. We don't have cloud costs. We can spin up from 100,000 users to 100 million users, and our cloud costs barely move. So it's really something that all these pieces had to come together at about this time to make this happen, and we took advantage of that, and we're pushing it forward in a huge market, to help that 800-pound gorilla, continue to dominate in the space.
So, just from a protection standpoint, as far as your intellectual property, are you in a good place there?
We're in a great place because we were very early to this, right? Nobody was thinking about this. AI was just coming out, and we basically said, hey, let's see if we can use artificial intelligence to identify all the pieces of audio content on radio, and then be able to deliver a personalized stream back to the consumer. And we tested it out, and you would think that it would work well, and it did. And one of the beautiful things about it is, small companies in the AI space have a huge disadvantage to the large companies who have all the data. Well, if you think about it, the data for what we're doing is broadcast radio. It's widely available out there. We can just capture it, and we have it. So we have just as much as anybody. And that's what really helped us do this. And then as you go through the process of building these complex technologies, you find all kinds of issues. And then those are all additional patents that you can file on top of that. So this is my background. This is my space. I'm a named inventor on somewhere north of 130 patents.
So listen, wait a minute. You're stealing my thunder, man. So listen, if anybody is not familiar with Jeff, let me tell you why and if you're not familiar with me, so one of the biggest things for me, and the reason why I want to interview CEOs, founders, CFOs of companies is because those are the people that are leading the charge. They have the vision. They are the ones putting together the game plan, the strategy to achieve the vision, right? So I want to be able to look these people in the face and ask questions, hard questions, and see what their responses are. I want to get a feel for the people, who they are, what their background is, their failures, their determination to overcome. All of those things matter to me. Those are intangibles that you're not going to pick up from a conference call. I don't believe, right? And just to give you a little history on Jeff, if you haven't heard me talk about this before, I'm going to talk about it now. I mean, here is a guy that graduated from West Point, that became a neurosurgeon. And I'm talking neurosurgeon here, then created a spinal fusion product that is widely used in the industry, and now is in a artificial intelligence programming system that's going to revolutionize radio. And I talked to Jeff recently, and I thought that was pretty good. I mean, that was a pretty good base, and way more than I've ever done in my life. And we started talking. This guy's got like literally a whole bunch of other stuff that could really change a lot of different industries in the on the back burner right now, right? Until you get Auudia where you want Auudia going.
Yeah, I've always been an inventor, and it's across all kinds of different things that I'm interested in. And I think that adds value to everything that we do. It's really why a neurosurgeon would be in this AI space in the first place. It's really constant reading, constant thinking about problems and trying to solve those. And I have ideas on the clean energy side that I think are pretty compelling. I have most of my stuff is in the healthcare space, which is where I spent most of my life, paying attention to. So, but when I have an engineering background, and when you think about how you solve these problems and putting things together, it makes for a lot of exciting concepts.
Yeah. So, look, I don't think this is going to be the last thing we're going to see from Jeff. He's a very driven person, doesn't know how to give up. Right. And I think one of the most powerful things you said to me recently was, I love to solve problems. I mean, that's really what you're all about, is solving problems. Right.
That's what drives me.
And I think that is awesome. I mean, anybody that doesn't think that's awesome, I don't know. I happen to think that's awesome. And the thing is that, Jeff has the smarts to do it, right? I mean, that's the thing. You've got the smarts to do it, and you've already, kind of proven that. And I think you're going to prove it again here. And then I think you're going to go prove it again somewhere else, right? And that's the kind of guy that's the guy I want to partner with. I want somebody like that, right? So that's why we're having this follow-up call today, taking a look at the chart after the news on Monday. And I want to talk about how this actually kind of played out, because you had the stock was sitting at this very kind of key level right here at about $1.50. And that was heading into this announcement on Monday. But what was interesting is that actually Jeff, because we just both attended an investor conference together, basically kind of told them that, look, technically your stock is in a vulnerable spot, right? For the technical traders, the guys that don't know what AUUD does, don't care. They just strictly trade off of the technicals. And we had a very weak day on Friday for the overall markets. The markets really got hammered, and that carried over into the following week. And then you had, Auudia that came out with their news announcement, and this is how the stock reacted, which could be perceived as, gee, that data must be terrible. Far from the case. The data was fantastic. There was no analyst out there that had anything they don't even know. I mean, how do you gauge something that's never been really done before? So like Jeff said earlier, they put themselves out there. They came out with I mean, look, they did the launch on February 15th. That's when they did the launch. That's when they said they were going to do the launch. That's when they did the launch. They said they were going to come back in 90 days and give everybody the data. And guess what? 90 days came, they gave everybody the data. So far, Jeff has done every single thing, and his team, not just Jeff, has done everything that they have said they were going to do. They put out what they considered to would be positive metrics, and they blew those numbers away. So what's happening with the stock right now is, I would say, market related, not company specific. And in my view, when you have a story like this that is getting hammered like this because of the overall markets, that creates opportunity. I know it's difficult for people to see that when, you know, your account is going down in value every day, and people get scared and they want to sell and save whatever they can save. But that's typically the worst thing that you can do, is react emotionally. This is not an emotional thing. This is a sliver of time. And unless it's the end of the world, this too shall pass. And at some point, the market will start going back up again. I truly believe that. History shows that, because if you look at the long-term chart of the markets, it goes from the lower left to the upper right. Are there pullbacks and downtrends? You bet. But ultimately, innovation wins. And I think that will happen again. And I think this is at a very compelling spot. Jeff, I want to ask you real quickly, is there any threat of needing to do a capital raise? So you got a couple of things that are going to create issues for, or maybe that the short guys will like to pound on. And that would be, you're below $1, and, you know, maybe you're going to have to do a cap raise, which would dilute the shareholders, right? Are you in that position where you have to do a cap raise in this market environment right now?
Well, we're not going to do a capital raise, not an equity deal in an environment like this. You know, we would, if we were going to do anything, we would look to a straight up debt deal that we pay back later once the equity bounces. You know, and we put out, you know, more catalysts. We think we have more information coming, you know, and we're going to put some out at the end of the quarter, like we said, and then we're going to start messaging the conversion to subscription. We think we're going to get numbers there. We have to wait to see what happens on the subscription conversion process. But the goal there is, and this is what I've been telling investors, I want to be able to tell a story that if we spend, you know, $1 million on advertising, that is going to lead to X amount of recurrent monthly revenue for us. And this is how that's going to scale over time, so that it's an investment. I mean, will we raise capital to fuel that growth? If those results show us a great ROI on that investment, investment on marketing, absolutely we will. But we're going to do it into a story of strength, right? That's how I like to fund the company, into a story of strength. Right now, you know, we would not go out to the capital markets and raise equity. It just doesn't make any sense.
Right. Okay. So now we've made that very clear. And that's, for me, that would be comforting thing to hear as a shareholder. The other thing is, now that you fall below $1 and you're on the NASDAQ, right? And if you stay down here below this, and you're going to have pressure from, you know, guys that are just trying to keep it under $1. If you stay there, I can't remember how many days it is. I think maybe it's 30 days. Then you don't meet the NASDAQ qualifications to stay listed. You're going to get a letter from the NASDAQ saying you got 180 days to correct it. Which then people start worrying about potential reverse split, right? To get back above $1, because that's a common solution if you can't get the stock back above $1 just on its own merits, or maybe the overall market, right? The overall market stays weak, and we don't know this. Who knows, right? Maybe things get worse. Inflation gets worse. I don't know. Supply chain issues get worse. Everything gets worse. Nothing gets better ever. It just gets worse. I don't think that's going to be the case. I think we will, you know, work through some of this stuff. But if that is the case, And you are looking at, so you got 180 days. I think if you don't hit whatever it is in the 180 days, you can file again to get an extension for another 180 days, is I think the way it works. So really, that's like a long-term problem, right? That I don't think is that big of a deal. I don't think you're going to do a reverse split. Because I don't think there would be any need to between now and the time that you would have to correct that issue. Would you?
Yeah, I mean, we're not, listen, we don't comment on stock price. We just execute on what we're doing. So we respond to that. We think the environment right now makes no sense for raising capital. So, as I said, we're not for raising, equity capital. So we're not going to do that. If we were to do anything to extend runway, we would do a straight up debt deal,
Right.
that we pay back. And then, down the road, after we prove out our metrics and we're in a better position, we go from there. I mean, you can look at our history here on the chart and you can see that there's a lot of interest in what we're doing. You can see that we're pretty stable on where we've been. And we got these kind of weird gyrations going on right now that don't correlate at all with the news that we're putting out. So we're not too concerned about it.
Yeah. There's another thing too I want to bring up here real quick is that the volume, this sell-off is not like some massive volume, right? This is compared to where you've had these spikes in the past in volume. This is nothing, right? And that's another thing that I would kind of take into consideration is that this is not like some, huge holder is dumping their position, right? I think it's just fear in the overall markets. I'm not telling anybody to buy the stock. I am telling people to put it on your radar. This is a compelling story. I think it's getting stupid. I mean, you're now piercing the lower Bollinger Band. You kind of got down to 85-cent low. Could that be retested? Come back and retest the 85 cents? Sure. Do I think that under $1, this is a pretty attractive entry point? To me, it is. I mean, I'm going to look to add to my position at these levels because it just makes sense to me, right? I think this is overdone to the downside, but put this thing on your radar, watch it, follow the story. I got right above my head here, the investor email alerts that you can sign up for and have their press releases sent directly to your email so that when things come out, you'll know why the stock is moving. You've got the Fader apps. If you like this story and you want to, if you haven't checked out Fader, I've got it on my phone and I'm listening to it. So, it's going to get more interesting. You just heard that from Jeff. There's going to be new features. Download the app. Listen to the product. If you like the product, maybe you consider, buying some shares in the stock at under $1. You're part of. One thing I really want to emphasize is I don't think the retail consumer understands how powerful they are. And the reality is that any brand that is extremely successful, any store like Walmart that became really successful was all done by the consumer. That's who drove them to success, right? So if you can be part of that, you love the product, and hey, instead of just spending your money on a pair of Nikes for $1,000 that you don't need, maybe buy $1,000 worth of this stock that you really like, this product that you really like, and maybe in 10 years, that'll be worth a lot more than $1,000. I mean, that's just my way of thinking. But the consumer is extremely powerful. And if they really gravitate to this product, it'll be all she wrote. I mean, and you'll be very happy that you picked this thing up when everybody else is freaking out. So that's my take. That's not Jeff's take. I'm just saying that's how I view it. Watch the story, try the product. If you like the product, consider buying the stock. That's it. All right, Jeff, anything else that you feel as though I might have missed here?
No, I think it's a good overview of, the data that we put out and how we're moving forward and how we're positioned. So I appreciate you having us. I appreciate the kind words and the continued support.
Thanks.
Okay.
Thanks again for coming in, Jeff. Hold on.
Okay. Thanks, Tim.
Hey there, all you stock market junkies. Thanks for tuning in to yet another interview here at Alpha Wolf Trading. Today we had a follow-up with Jeff Thramann from Auudia, ticker symbol AUUD. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. Why not give us a share? And while you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.